Good morning, Ananda. So basically, in the last 1 month, three major events are there. One is the continuous FII selling. They started selling from September 27th. September 30th was the SEBI board meeting on the derivative action day. So one day before that, they started selling. From September 27 onwards, they started selling. Until yesterday, not even a single buy day was there. So first time I am seeing just such a long day of continuous selling. Even on Muhurat day, just 1 hour trading session. On that day itself, they sold it. Some 200, 300 crores, they sold it for 1 hour session. So this is just such a long days of selling. First time I am seeing. The second important event is the US election, where Trump for the second time is going to become the US president, and he has won the election, presidential election. So some implications will be there for the global economy, for the American economy, as well as the Indian economy. So in coming days, we will come to see. In January, he will become the president, and after that, he will start taking the actions which he has promised in his poll campaign. And third is the Q2 results. So Q2 results were almost lackluster. Most of the sectors like the FMCG, the growth was not there. Auto two-wheelers did well, but others like four-wheelers like Maruti, Tata Motors were below expected. And only few sectors did well. Among them, one of them was the PSU banks. So PSU banks posted reasonably better results, but railway stocks and all the results were bad. In the sense that there was no growth, the profitability was lower, revenues were lower, like that. So most of the company results were lackluster, and in the first half of 25, the growth was low single digit. If you combine the Nifty companies results, the earnings will be low single digit. Similarly, the combined of all companies of broader market also, it will be mid single digits. The earnings will be there. And overall for the current full year, we are expecting around a 10% growth. Because even in the second half, if you grow around 15%, the overall growth will fall to 10% for the full year for FY25. So these three major events, FII selling, US elections, then the Q2 results. So one thing about that the market were weak means it will give buyers a chance. If you see some of the long-term investors, they generally become active when the market is down. During the very sharp up move on bull market, only traders will be very active. Whereas on the down market, if you see the long-term investors, they will become very active. They will watch the results very closely. They will try to predict what the long-term prospects is, and they will start buying. Slowly, they will accumulate it. But in bull market, what used to happen when the results comes immediately, stock price will go up by 20%. It won't give the opportunity. Whereas when the markets are down, you will get the opportunity to buy the shares. So that is one plus point for the long-term investors when the markets are weak and markets are going sideways. And now the situation is like that. And even now I am also closely watching most of the results. And I am spending more time on watching the results to pick up some good stocks, because you will be able to get an opportunity to buy shares in this sideways market. And Nifty and Sensex, if you see the overall, it is down by 3%. Mid cap down most by 5%, and small cap by 3%. That's the index movement in the last between last meeting and current meeting. And this is the index movement from the high. See, 2 months back, what everyone told was that mid and small cap index were overvalued. It's time to switch the large cap. When correction comes, large cap will fall less, whereas mid and small cap will fall more. But what has happened now? Actually, Nifty has fell more than the mid and small cap indices. So you see that Nifty fell 8% from the peak, from 52-week high, which is the peak. Whereas if you see some of the small cap indices, they are down by 5%, 6% like that. Mid cap indices around 7 to 8. So mid and small cap did not fell more than the Nifty index. And even if you see portfolios, individual portfolios, even though the market has come down by 8-9%, some of their portfolios were down by 2-3% only, not much down from the peak. Those are holding some good stocks. And mutual fund NAV, large cap fund has fell, whereas the flexi cap fund NAV fall was much lower than the large cap fund. So against everybody thinking of that, mid and small cap will correct more by 10-15%, whereas large cap will correct less when the market falls. That hasn't happened now, because the seller, who is the seller now, foreign institutions were the seller, and they own mainly Nifty stocks. So that is why the Nifty fell this time much more than the mid and small cap index. And among the sectoral index, if you see that oil and gas fell by 17%. So the main reason for why oil and gas index fell more is that the Reliance has the more weightage in that segment, and Reliance fell more in this correction. Similarly, CPSE, the central PSU companies, where most of the PSUs went up very sharply in the last 1 year. So the correction also equally sharp by 14%. This is the PSE, public sector enterprise, that fell. Then the reality sector is a high beta index that down by 16%. And media, not more companies are available in the media index, so it is down by 21. FMCG, the surprising part was the FMCG. Basically, the FMCG's index used to be very defensive. But this time what happened that just 1 month before the results, September, most of the FMCG companies went up before the results, but after the results it fell equally. Hindustan Unilever fell from 2,400, it went to 3,000. Now again came back to the old level. So this rarely happens. FMCG stocks generally go up slowly and never fall. But this time what happened was that in the second quarter, FMCG, most of the FMCG stocks went up very sharply, and they have corrected equally sharp and back to what was the price was in the Q1. So that index also fell by 12%. And auto index, we had a great rally in the auto stocks, and that has corrected by 14%. So bank index only 5% it fell. So seeing the index fall is not a major correction till now, in spite of foreign institutions selling 1.5 lakh crore in the cash market. The fall by 8% is not a big thing to worry, thanks to domestic money, domestic mutual fund money. Suppose if they keep on selling like this for another 3 months, 4 months, then only we will come to know what will happen. Already in the last few days we are seeing that the domestic institutions were buying less than what foreign institutions were selling. And you see in October they sold 1.14 lakh crore in the cash market. This is the cash market sell-off, but they have bought it. For example, in the Hyundai IPO, they have bought it around 10,000 crores worth of shares in the Hyundai IPO. That's a very big IPO that came. In that they have bought it around 10,000 crores. So overall in the month of October, they have net sold 94,000 crores. Almost 20,000 crores they have bought in primary market, QIP issues like that. And if you leave aside, they have sold 1.14 lakh crore worth of shares in the secondary market. This is the highest monthly outflow ever in our Indian history, if you say that. Even during 2008 and in COVID fall also, they did not sell that much. So the previous highest sell-off was in COVID time, March 2020 they sold it, around 65,000 crores they have sold it. So almost double that of in COVID fall they have sold in the month of October. Still our market did not crack at that time. In that March sell-off, our market fell very sharply, March 2020 sell-off. And many of them used to ask me, so if I have sold this much, by this time they would have sold some around 15-20% of their overall holdings, and like that many of them asked me. But FII's overall value in our Indian market is around $800 billion. $800 billion, that is the current value of holdings they have in Indian market, and they have sold around $17 billion they have sold it. So that means around just 1.75% of their overall holdings they have sold it. Maximum they can sell up to 5% they may sell. Beyond that I don't think they will sell it. Even another 1.5 lakh crore if they sell means by that time the sell-off will end. By November or December maximum, the sell-off of from FIs may end. That is the worst case scenario I am telling. And this is the historical foreign institution selling. So these are previous sell-off. You see. So the more they sold was in 2008-9, this global financial crisis. At that time, 15 billion they sold it, which started in January 2008 and ended in March 2009, where the market has made a bottom in March 2009. Almost 15 months they sold heavily. The overall amount was just 15 billion, which they have sold it in the last for 40-50 days. They have sold it now. But at that time, the market cap was very less. Almost now, if we compare that with now, market cap has gone up by almost, overall market cap has gone up by almost 5.5 times now. And foreign ownership also fell sharply at that time. Even now, foreign ownership has come down. But what is giving support to the market is the domestic money, mutual fund money, where they are sitting on huge cash. And that is the reason why our market has been crashed. At that time, market fell very, very sharply. BSE 500, if you see that, at that time, market fell by 66%. Other than that, the market fell very sharply during the COVID fall. Even that time, they sold around 10 billion only. February, March, April. 3 months they sold it, 10 billion. And then afterwards, they started buying. So what our expectation is that market may maximum fall by 15%, maximum may fall. Already we are down by 8-9%. Another 5-6% possibility is there, and most probably by November or December the sell-off will come to an end. The other important event which has happened and everyone was anticipating was that the US presidential election outcome, and Donald Trump for the second time he has won the US presidential election. And one thing we have to remember that his policy and economy and external affairs are completely different from the existing one. The current Democratic Party policies and the Republican Party Trump policies are different. And we have to see some implications may happen from January onwards, and we have to see how the market is going to react. And his policy, some of them are highlighted here. His policies are mostly aligned towards America first. During his first term also, he told the same thing, but he did only few things. Generally, Trump, no, he used to make a lot of big dialogues, but on implementation, his team used to implement it, but they don't implement it. Some of the very brave dialogues and all he used to talk during poll, no, that did not happen during his first tenure. I think same thing will happen now also. He says that he is going to put a tariff on all imports to US. I think that may be difficult. It may backfire because immediately the inflation rate in US will start going up very sharply, and US consumers may get affected. So maybe for a poll promise he would have told it. Maybe some of them will be very difficult to implement. And he promised that America first aligned policies he is going to bring, and the tariff on imports, this is what everyone is closely watching. He told that he is going to put tariff on Chinese import by 60%, like that he told, and all from all other countries by 10%. We have to see how far it will happen. When he came, know what he will do is that he will put a committee to review it, and they will drag it for months, and they may put in on few items. The balance will never happen. That is the most likely situation is going to happen. But he will make very strong dialogues every now and then, and the markets will react. But most of the thing will never happen. That's what his first tenure record was. And this time also maybe the same thing may happen. And he promised to cut corporate tax. He has promised it. Maybe he may reduce to some extent. So what most of the IT analysts were telling that the reduction in corporate tax may enable American companies to spend more money on IT spending, and that would be positive for Indian IT sector. That is what IT analysts were telling. And illegal immigration, he may do it, and most of the Indians are going illegally, they are going it, but illegally many from Mexico and other countries they are coming. He may try to stop it, that may happen. And he is favoring strong dollar, US dollar. That is why when the elections came, immediately all the metal prices started falling. So whenever US dollar becomes strong, means what will happen is that all the metal prices, gold, commodities, they will fall. Generally, they go up very sharply during the weak dollar time. But since Trump is in favor of a strong US dollar, immediately after this election, the most of the metal price fell very sharply. And most important thing is that he is unlikely to interfere in other country wars. Most probably the Russia-Ukraine war will come to an end. Some compromise may happen in that. And Trump is having a good rap with Putin also. Most probably Ukraine may surrender some land to Russia and war may come to an end. And if that happens means oil price may come down. And most of the Trump policies are aligned towards lower oil prices. So that way India may benefit. Similarly, Israel and Gaza war, that also will come to an end. Most probably this geopolitical tension may come to an end. And impact, if you see that US exporting countries, India is also one of the largest exporter to US, and India has trade surplus with US, whereas in most of the countries India has trade deficit, whereas India has trade surplus with US, and most of the US exporting countries, particularly from Asia, will get affected because countries like South Korea, Taiwan, and China, they have huge trade surplus with the US, and if Trump puts some tax import tariff on these countries may get affected. Geopolitically, as I said, that Russia-Ukraine war may come to an end, and geopolitical tension in Middle East may get reduced. And for India, this China plus one policy, where they try to source alternate site for import, alternate site for India may benefit little bit from that, and IT companies may benefit from cutting corporate tax in US, but immigration issue may resurface. Last time when he was president, the H1B visas, some issues came, and many companies were complaining that we are not getting enough H1B visa quota, like that. Many IT companies were complaining, and that may resurface. Some possibility is there. But overall, net there is a possibility of IT company getting benefit from Trump administration. That is why if you see that IT companies are stable to positive after the US election. This is the Nomura, one foreign institution, and his assessment, which country will benefit, which country will lose. Actually, he gave this before the election, a very big report, around 80-90 pages report. He released it in the month of September on what will happen if Trump wins, and which country will gain and which country will lose. There are some 80-90 pages report. The Nomura released it, and in that, if you see that what they were telling, Nomura view was that India will be one of the major beneficiary because of Trump 2.0 administration. India, Malaysia, Japan will be the beneficiary, and Indonesia is neutral. Countries which will be losing mostly were South Korea, Taiwan, Mexico. For Mexico, he said some 1,000% or 2,000% tariff he is planning to put in. So Mexico, South Korea, Taiwan will be losing, and Eurozone, China, Philippines also loser, and UK, Canada, Australia, they were marginal loser. Even US also they have put in as an marginal loser in that list. Actually, this report they released it in the month of September. They have released, late September they have released this report. And after Trump won, so many reports came, and the sector analyst, suppose somebody is a metal sector commodity analyst, means he says that commodity sector will benefit from Trump. Now someone is an oil and gas analyst, means he says that oil and gas sector will benefit from Trump. IT analysts, they are saying that IT will benefit from Trump administration. So overall, whoever analysts are there, everyone telling that their sector will benefit from Trump administration. So only time will tell what will happen. And US Fed, they have cut the rate further yesterday, another 0.25 basis point, which is mostly in line with analyst expectation. Initially, they cut by 50 basis point, and day before yesterday night, they cut by another 25. So next month, December, another meeting US Fed is there. In that, another 25 basis point cut is expected. So overall, 100 basis point cut might have, overall cut will be there in the last three months, in the fourth quarter of FY 2025, and post that there may be some pause, and US Fed will see that how Trump administration is going ahead. Suppose if they put huge tariff means it will be highly inflationary for US economy. In that case, US Fed may pause for some time and then they will take the decision. So next month another 25 basis point rate cut will happen in US. Then so almost 3 rate cut might have happened, but if you see the RBI, the meeting is scheduled on December 4 to 6, and here the problem is that already rupee is weakening, so almost 84.4 it has come, a lifetime low rupee. Suppose if RBI cuts rate further means further rupee depreciation will happen. So instead of that, what they instead of the rate cut, what they prefer is that they may prefer cutting CRR and SLR. There is a possibility of doing that. So most probably they may cut CRR, cash reserve ratio, and SLR. So why they are cutting cash reserve ratio is that, see, banks, the deposit growth is much lower than the advance growth. So even yesterday SBI result came, their Q2 deposit growth is around 9.5, whereas the advance growth is near to 15%. So there is a mismatch between deposit growth and advance growth. So now in order banks to get more money to lend, but they may prefer, RBI may prefer cutting cash reserve ratio, and that may release some money to the bank. And statutory SLR also they may cut it, but SLR may not bring much money because this one is not compulsory to do it, because many banks even now they are holding much more than what RBI says, whereas cutting CRR will immediately release huge cash to the banks. And among the results, if you see that the results were extremely lackluster this time, and the domestic economy slowed down in the first half, that is from April to September. The main two reasons were there. One is the lower government spending, second is the surplus monsoon. These are the two main reasons for the slowdown. If you see some of the high frequency data like auto sales, GST collections, everything pointed to the slower growth in our economy, as well as many consumer loans, microfinance loan indicate there is a huge stress at the ground level. If somebody is holding ESOP Bank, Kerala-based microfinance company, that results will be average only. Many of them were asking whether shall I buy it now, this is ESOP Bank. The main problem is that once the microfinance issue NPA comes means it will take 6 months, at least 6 months to one year for the cycle to turn around. So in near term, the stress at the microfinance level will be there. It will gradually recover only after the economy revives, then the people will start earning money and then they will start repaying to the banks. So near term, the microfinance will see huge stress, and it will take some more quarters for them to revive. Even big companies like SBI Cards, Bajaj Finance, where they give consumer loans and card finance, they also have seen huge rise in NPAs, and they have provided provisions for that. All this indicate there is a stress at ground level, which will happen only when economy is slowing down. And company results like Hindustan Unilever, Nestle, all they pointed to that there is a big urban slowdown is there in consumption, and the commentary, all it indicates that economy has slowed down. Our feeling is that from January onwards, definitely economy will pick up. Already we are seeing some signs of pickup. Yesterday, Tata Motors told that their huge inventory has been sold out during this festive season, and most of the dealers are having normal inventory they have sold. So October, November, December will be normalized month where the inventory level will come down. From January onwards, again restocking will happen, which will benefit the corporates. And the other important thing is that we had a good monsoon. The kharif crop output will come, which will reduce food inflation, and farmers also will get money. So basically, by January, February, March, economy will pick up very strongly. RBI also would have taken some action by that time by cutting RCR or repo rate. That also would have happened. And January, February, March will clearly indicate a big pickup in our economy. So somebody who have 6 months or 1 year view means it's a good time to buy some shares which they want to buy, because during the downfall only we could able to get time to gradually accumulate it. And GST collection, you see the growth was 8.9, October data was 8.9, September was 6.5. So somebody tracking GST collection for last many years, they can see that it's not a number which we used to see previously. Consistently we used to see a 12% growth. Economy was growing around 7% and inflation 5%. So overall 12% growth GST collection will be there. Whereas now if you see that September was 6.5, whereas October was 8.9, which is in double, which is in single digit, which clearly indicates that there is some slowdown in the economy. And in the budget, government has projected 11% growth in GST revenues. And this is the government capex. So GST collection is down, which indicates that the economy is slowdown. So one reason is that government capex is down. This is the first 6 months, April to September 2024, April to September 2023. So the tax revenue has gone up by almost 2 lakh crore. It has gone up. Whereas if you see the capital expenditure, last time April to September government did 4.9 lakh crore of capital expenditure, whereas this time 4.15. So that is why all the railway stocks and all posting very poor results, because government has reduced the capex. Railway directly comes under this capital expenditure of the government, and the fall, almost 20% fall is there, which clearly is reflected into railway company results. And overall expenditure is almost flat in spite of revenue receipts and tax revenue, gross tax revenue going up by 2 lakh crore. The government expenditure is almost flat, 21 lakh crore last year, this time also 21 lakh crore. So government is having surplus cash. Most probably they may start spending heavily. Already they would have started from October, November onwards, and it will likely to pick up very strongly in the fourth quarter. That is from January, February, March. And because of lower government spending, the fiscal deficit from 7 lakh crore in the first half, it has fell to 4.7 lakh crore. Q2 results, as I said, the lackluster Q2 results. Very few sectors did well. PSU banks did well. One segment where only 3 companies, that ratings companies, CRISIL, ICRA, CARE, only 3 companies were listed. So they have also surprisingly posted very good results. Like that, here and there, very few companies have posted good results. And till now, Nifty 50 companies Q2 revenue and profit growth was around 5% only in the Q2, which was much lower than expected 6 months back. Foreign flows, this is the calendar financial year. So from April 1st to till day before yesterday, net they have sold 2.1 billion. So whatever money came from April, May, June, July and all, everything was got sold off in the month of October, September last and October, and in November also they were continuously selling. So this year till now it is 2.1 billion they have sold off. And events to watch, foreign action we have to see it. Once they stop selling, immediately market will bounce back because right now they are selling it and domestic institutions buying. Once they stop selling, then immediately markets will bounce back. And many of them used to ask, many days what we can see is that FII is selling 4,900 crores, domestic buying 5,000 crores. Many of them used to call me. FII sold and DIA bought it, and DIA bought more than 100 crores. Then why market fell by 200, 300 points? They used to ask. See, buyer, their main job is to buy at the lower rate. Somebody is going to sell continuously for the next 1 month, means why should I give an exit to him at a higher price? Now, buyer, they always tend to buy at a lower rate. They place at a lower rate only, they will place it. So always buyer and seller in any day, it will be equal only. Somebody selling means somebody will be buyer. Buyer and seller, the value will always will be equal. It doesn't mean that when 500 crores worth of shares has been sold, another person bought 500 crores means the price will remain stable. During a bull market, what used to happen? Buyer will be 4,000 crores buyer, the seller will be 4,000 crores, but Nifty would have gone up by 300 points. So the seller, he wants to exit it and he will try to press the sale at a lower price, means buyer will try to buy at a lower rate only. So Nifty will fall at that time. So by seeing the FII buying and FII selling and DIA buying data in a single day, it does not indicate what is the movement on that day, unless there is a big mismatch is there. For example, the foreign institutions sold 5,000 crores, domestic institutions bought 2,000 crores, means on that day we can clearly tell that market would have fell very sharply because FII selling was very high. But equal value, it could have been either fall as well as it can happen on the upside also. So the FII action, we have to watch it closely. The second thing is the Trump commentary. So he used to make lot of commentary by time to time. He will suddenly sell that. Even last time also when he was in power, he told that India is charging a huge tariff for American goods. If they don't reduce the tariff, then they will ban Indian goods. Like that he made commentary last time when he was president. So like that he used to make lot of loose stocks, and stock price and the sectors will react temporarily at that time. But most of the thing will never happen because there is a big background force behind Trump, which actually implements their policies. So we should not take everything what Trump says. So that's it. Thank you.